There are two main ways that you can invest your money. This is via lump sum investing or pound, dollar or Bitcoin cost averaging. Today we're going to look at the approach that I take when I'm investing my money, and that is of course pound cost averaging. So what is pound cost averaging? Pound cost averaging is an investing strategy where the investor divides up the total amount that they want to invest in a single product over a period of time. This means that several purchases will be made across that period of time, thereby averaging into the price that you get in your position. All this helps to reduce the volatility that you will see in your portfolio over time because you've got an average price rather than at one point in time. This all means that you won't get stung if you invest a large amount and then the price drops overnight, thereby lowering the risk. However, the downside of this approach means that you won't get the extreme gains if the share price goes parabolic, thereby lowering the potential reward. If you're a long-term investor like myself, this isn't something to worry about because you're in for the long term, and you know that statistically and historically over a long period of time the value of shares will increase along with the S&P 500 and a whole load of other metrics which have shown this to happen over time. This strategy can work really well if you've received some inheritance or perhaps you've been saving for a prolonged period of time and you don't want to risk putting all of that money into a product, a stock or an ETF at one point in time. So it lowers the risk to the initial capital. Investing the same or a similar amount of money into the same products every single month could also be considered pound cost averaging. Let's say you plan to invest £300 into the VUSA, the S&P 500, every single month for a full year. That would mean that at the end of the year you'd invested £3,600 into that one product. In doing this, you would make 12 trades throughout the year, meaning that you'd buy in at 12 slightly different prices, some of them high and some of them low. While you are arguably lump sum investing at that point in time, throughout the entirety of the year, you are pound cost averaging into that particular investment product. There will be some people who would argue that that's not pound cost averaging, and to truly pound cost average, you would need to further split those investments down into smaller investments within the month. Let's use that example of £300 again. Using what I've just said, some people would argue that you'd have to split that £300 into 4 or more individual investments throughout the calendar month. For example, we'd say that we'd invest 4 times within that calendar month, meaning you'd invest £75 every week or so within that calendar month into the same product to make up the £300 throughout the full month. 4 investments a month throughout the full 12-month year will mean that you'd invest into the same product 48 different times. This would in essence increase the impact of the pound cost averaging approach, and it would give you a more average, if that's even a thing. This can all get very time consuming, and it can also cost quite a bit if your brokerage charges per trade. Of course, if your broker does still charge per trade, there is a whole host of different products out there now which don't charge per trade, so this would make pound cost averaging a much more viable approach. Personally, I use Vanguard, Trading 212 and eToro, all of which have next to no fees for trades. Therefore, I do my pound cost averaging once or sometimes twice per calendar month. And this gets me the best buy-in price and it helps me to average down on my purchase price across all of my investments. This approach works well for any type of financial instrument, but particularly those that are very highly volatile. I use pound cost averaging for all of my investments, so into ETFs, individual stocks and shares, as well as cryptocurrency. However, cryptocurrency may see the greatest reward for pound cost averaging because of those massive market swings. Rather than investing in at one point in time when you could be buying in at an all-time high which might not be surpassed for several months or years, if you buy in $25, $30 every week or every month, then you'll average into that price rather than potentially getting stung when, of course, Bitcoin, cryptocurrency, Ethereum crashes at some point in time. To see pound cost averaging in action, then we'll hop into my Vanguard account and look at my investment in the Vanguard FTSE Emerging Market Fund. So you can see that I've got an average price for this product of £46.33, and the product is currently valued at £50.08. So you can see that I'm already making a positive rate of return. But let's jump in and have a look at exactly how I've got to that average price. If we scroll down, you can see all of the individual trades that I've made into the Vanguard FTSE Emerging Market Fund. You can see the units that I've purchased, so each trade I've either purchased 1 or 2 units of the fund, and you can see that over time I've invested near enough every single month since I've initially invested back in April of 2020. So you can see April 2020 I made 3 investments, there were then 2 in May, 1 in June, July, missed out August, September, and so on all the way through until the 5th of August 2021, which is actually today. You'll also notice the price that I've bought in for each of these individual trades. So right down here you can see we're at £38 per unit, and that's steadily increased all the way up to January of 2021, where it peaked at around £54.63 per unit. You can see since that point it has been decreasing in value over time. I can hear some of you saying already, if you'd invested a lump sum back at this point in April 2020, you would have seen a massive rate of return of around £12 per unit. And yes, you are obviously correct. However, if we look up here to January 2021, when the share price or the unit price was £54.63, I could equally have invested all of my money at that point, and I would never have known if it was going to go up or go down. You can see since that time I've invested at £4 to £6 below that initial high, meaning that I could potentially have lost £4 to £6 per unit if I'd invested in a lump sum at that point. On the graph here you can see that in action. Throughout the initial stages of my investments you can see that it was steadily growing before we get right up to this point, which I mentioned, the highest point the VFEM has been to date. And since then it has fallen in value, and you can see that here with the lower denominations within each of my trades. So pound cost averaging is a really good strategy no matter the financial instrument you're investing in, and you can see here the strength that it gives to your portfolio and the way it protects you and hedges against potential market volatility. I hope this video has been useful for any of you who are wondering what pound cost averaging is, especially if those of you out there who are new to investing. Pound cost averaging has worked really well for me so far, but if you don't believe in pound cost averaging, or maybe you use a different approach, please let me know down in the comments below and I'll happily have a conversation with you about what approach you use and how well it's worked for yourself. One of the ways that I've managed to continue to invest in both my YouTube channel and into my financial investments is via something called match betting. Now this is a way that you can make tax-free and risk-free cash every single month just by using bookmaker offers against them. So far I've made about £7,000 in a little over a year. If that sounds like something you'd be interested in, or just want a bit of extra cash on the side, I'll pop a video up above that you can click on to see exactly what match betting is, and if it still sounds interesting, there's a link in the description down below for the software that I use, which is Profit Accumulator, which makes match betting ever so easy and means that you don't really have to do anything. You just have to click a few buttons and make your money. And with that sales pitch over, stay safe investing, make sure you're pound cost averaging, and I will catch you in the next one. So there we go, pound cost averaging in effect and making me money. Oh, you didn't record that, you tit. I can't believe you've just done that.